The latest reading is 69.8%. And actually in May, because of base effects, it's on track to go up a little further, probably reaching 75% or so. And then we're on the verge of a big decline in inflation in the second half of the year. There's a couple of factors in this. One is there's going to be some favorable base effects, but also the underlying trend of monthly inflation has been coming down because of the tightening that we have done. Now, if you look at market expectations, the markets agree 100% that inflation is going to come down quite a lot. We disagree a little bit on where it's going to end. Our forecast and our target for year-end is 38%. But market expectations, being around 44%, and our policy rate being, 50% in simple terms, 64% in compound terms, is actually quite a tight stance. And if you look at, financial conditions, various indicators of market interest rates are quite high, and credit growth, which is a leading indicator of demand conditions, has come down quite a bit. So we think in the second half of the year, it's going to be really supportive of this inflation, and we'll be, on track to hit our targets.
So thank you for spelling out how you envisage the inflation profile. Let me just ask you, if you did get an upside surprise in inflation, higher than what you penciled in, would you hesitate to hike interest rates again? I know you've said you'll do whatever it takes.
Yeah. So, great question. Look, you talked about the popularity of central bankers, or actually unpopularity. We're not in the business of being popular. We're in the business of doing our job, which is to get back, inflation back on track to reach price stability. We've had upside surprises before. This happened in the month of February, in March, when we had the February reading, which was a lot worse than we anticipated, and we reacted strongly. So we're cognizant of the risks, upside risks, and we're ready to act, to do whatever it takes to bring inflation down by the end of this year, in line with our forecast. But it's not just this year. Our longer-term forecast, target is 5%. So our goal is to bring it down to 38% this year, and then 14, and then to single digits, and then thereafter too. So it's a long process, and we remain committed to keep our policy stance tight.